Hello, everybody. Welcome to this webinar brought to you by Wealthford in collaboration with RHB Investment Bank. Our webinar today is titled Market and Warrant Insights Post Budget 2026. So, my name is Shen Chu. I'm the moderator for this session. Now, Malaysia Budget 2026 was tabled in Parliament on the 10th of October 2025. So the key question that investors want to ask is, what is the impact to the stock market? So which sectors will stand to benefit and which sectors will be adversely impacted? Okay, so these are the key questions that investors ask. So today we're going to talk about, these insights from this budget and how it can move the market. So joining us in this webinar, we have the founder of Want to Invest, Mr. Max Tan, to do a deep dive into budget 2026. So aside from this budget analysis, we have also invited the second speaker, who is a warrant specialist from RHB Investment Bank, to share with you how to effectively leverage structural warrants to ride on the budget 2026 market theme. All right. So before we begin, as usual, disclaimer: whatever we share in this webinar is only for educational purpose. In no way do we give any recommendation for you to buy or sell any listed securities that we mentioned here. If you decide to make any investment decision, you're solely responsible for all your investment risk. All right, so let us begin the session by inviting our first speaker. Okay, let me give a brief introduction. He is a passionate investor with over 8 years of investment experience and currently serving as an associate director at Sensoria Capital Center Berhad, specializing in private investment in public equity deals and late-stage IPO. So with extensive experience in risk and compliance management and solid background in the Malaysian stock market, Max bridges funds with promising investment prospect. He is also the managing director of Guaku Capital, delivering valuable financial content and ensuring fair information distribution among investors. So his expertise is further recognized as an active speaker on City Plus FM and SGX Academy. Furthermore, Max is also a registered marketing representative with Momo Securities Malaysia, Weibo Securities, and iFast Capital. So Max, good evening. How are you today?
Good evening, Shane, and very good evening to everyone that joined us tonight. Hope you guys are having a good day. Has been raining today. Yep, I'm doing well.
Fantastic. All right. So we can't wait to learn from you about your analysis on budget 2026.
Okay, thank you so much. Hi, Eugene. Yep. Welcome everyone. And just a small clarification on the introduction just now. I think I forgot to update my information to Shane. I have moved on from Sensoria, so I'm no longer in the associate director position. So just a small clarification. Yeah. So now let me share my slide. One moment, guys. Okay. I think you guys can see, right? Oh, good. If everyone can see
Yes,
my slide, yes. Thank you, Shane. If
perfect.
everyone else can see, can type in yes, so that I know I can start already. If everyone is ready. Okay, Eugene, yes. Jack, yes. Okay, thank you. Someone press like also can. You can also, if you're shy to type in yes, you can also press the like. Raj, Chin, Amir, Catherine, thank you so much. Okay, without further ado, let us go into our topic today, which is the budget 2026. What would be the impact of budget 2026 to the overall market? Now, if we look past at the budget, it has passed some time already. I could say that the market sentiment in the recent days also quite good, especially on the IPO. We could see a clear recovery with THMY today also performed very, very strongly. So let's go into the budget 2026. In the event you do not know, if you have already read through the whole thing, you understand the whole budget, bear with me. So we're going to go into some salient details and some important details before we dive into some of the sectors that I would think that it will be quite interesting to discuss tonight. Right, some of the things that we must know and you may have already know. So the Malaysian economy has expanded by 4.4% in the first half of 2025. And for the full year basis, we are actually looking at a 4.0% to 4.8% this year. To me, actually, the first half 4.4% is quite a surprising number. And consider IMF the International Monetary Fund has actually initially cut our forecasted growth rate to 4.1% from 4.7% earlier in April 2025 this year. So this represents quite a, I would say, even though that's an impact from a tariff which started back in March and April back then, right? And everything seems to be doing a bit more better now. And hopefully into the second half, we could end on a higher side, higher spectrum of the GDP forecast that the budget 2026 has given. Now, in light with this, actually the Malaysian OPR rate, which is the interest rate, has also maintained at 2.75% so far, which is quite stable. And I think it's a 25 basis point drop from the 3%. It's really a good thing for the consumer side. So it actually somewhat encourages a bit more spending, while it also doesn't impact ringgit too much. Because if you compare ringgit with a basket of other currencies, apparently we are performing quite decently. And also, if you compare to USD specifically, and they are also on the depreciating trend. Now, when we talk about interest rate, specifically, next thing we could imagine is banking stocks, right? A recent report, I think by Hong Leong Bank, they mentioned quality of the household debt. I think this one quite interesting and important for our session today. The quality of the household debts are so far quite healthy, right? Household debt to GDP currently standing in 84.8% compared to 84.1%. So we can see that people are they are still okay into spending. Now, this is a good sign because we need to look forward-looking statement, right? Look, going into 2026, the budget also actually outlined that the GDP growth of 4.0% to 4.5%. So how would this mean for our growth going forward? Yes, compared to 2025, it would be a more moderated growth because we put a 4.8% more on the high side. But coming this week, actually beginning today, we're already starting the 47th ASEAN Summit, which global leaders will be talking to each other very, very soon. They are here, and we will see how Malaysia we could position ourselves. This is very important because this would directly impact a couple of things. Number one, our currency rate, which could impact the import-export companies. And number two, geopolitical tensions such as tariff. And also it would further impact, will there be a deterioration and also the acceleration in terms of deglobalization. So these are some of the things that we need to look into it. Now, this year budget, surprise, is another largest budget, actually every year also the largest, with development expenditure standing at 81 billion DE. This is what we call DE. 1 billion higher than previous year. Of course, this is not exactly a lot of people that fancy construction stocks or infrastructure stocks. They would say this is okay, not bad, improved from last year, not very high. But we go a bit deeper into this development expenditure on geographical basis later on, right? But one thing that the overall, if my own investment portfolio wise, looking into 2026, one of the things that I see is the consumer part, which if you look at the tone of the whole budget, I would say a bit more towards the right up first, right? With all these initiatives, whether we like it or not. For example, the Budi 95, a lot of people complaining, but yet ultimately it does solve and identify who are the people that are actually selling our subsidized petrol to our neighboring country without licensing, right? So, goods and bad, you cannot have a bit of everything. So overall, the tone of the budget 2026 is to address one of the key things, the rising cost of the cost of living, right? And also they're targeting also onto the urbanization, right? When you think of urbanization, immediately you may already imagine utilities and also infrastructure work, more better roads being built and all these things. But on the flip side, I think this doesn't really impact our non-drinker or non-smoker friends, but tobacco actually got impacted quite badly, and alcoholic, another exercise duty of 10%. And going into next year, if you are holding a particular sector stocks, such as iron, steel, or some traditional energy sector, there might be a carbon tax coming very, very soon, which will be implemented next year. So this carbon tax, we do not know what will be the rate yet. It could be mirroring our neighbor Singapore rate. But if it comes in, it would definitely eats into the certain energy hungry industry. So, for example, iron, steel, energy, traditional energy, all these sectors. So, for let's say coal-fired plant, so you need to be a bit more careful with that. So, with this high-level landscape, so my personal strategy actually is moving more towards internal consumption. So, what do we mean internal consumption? Which means it's more towards the consumption level, the healthiness level in Malaysia itself. It would be less sensitive towards the headwinds that we are facing on tariff and also in the foreign exchange. Later on, we may explain a bit further. Okay, we go into the geographical allocation in terms of the fund. Sorry if the slide's a bit laggy. Now, as many of the political experts had also expected, this allocation are actually highly allocated into two areas, largely into Sabah and also Sarawak market. So respectively, they both receive 6.9 billion and also 6 billion, right? So some of the more notable projects that are involved in Sabah and also Sarawak area includes the Madani submarine cable connection, which is the Salam, which consists of 3,190 kilometer network from Sedeli in Johor connected to Sabah and Sarawak. So this is one of the major infrastructure projects. So think of it, submarine cable connection. If second half of 2024 and first half of 2025 into Q3 of 2025. A couple of things that we find a bit more interesting is the underground utilities, right? Everyone is talking about underground utilities, whether it's open trench, non-open trench methods, such as the HDD, all these things. Basically, is to build the cable underground for electrical supply, for data center, for substation, for upgrading work, all these things. Now, a bit more niche into the sector is about submarine cable connection. In Malaysia, we do not have a lot of companies that have all this expertise. So it is unclear yet that the allocation of this deployment, if we go into which companies. But what we do know is some companies, they are already talking about subsea cable laying, right? For example, one of the oil and gas related company, they are not specifically oil and gas company, right? They're serving the oil and gas industry, which is key fuel. So earlier, I think in 1 quarter ago, they already bought a vessel specifically for subsea cable laying. And then another cable laying company in Malaysia, UUE, they already been talking about subsea level cable laying job back since their IPO. So these are some of the companies that are a bit more involved into the subsea level, right? And of course, this is only one of the projects, one of the many, many projects. So we still have the Sabah Sarawak Link Road, which is what we call SSLR. Now it's on track now for completion, I think up to November 2026, with phase 2 coming on in mid 2029. So in terms of recognition for companies that have taken up the SSLR projects, so you know it's up to end 2026. Kalabakan and Simangari Road, it's also one of the major project. I think it's coming soon, but we do not have a fixed amount yet. And then for those who travel to Sabah or Sarawak, or you are from Sabah and Sarawak tuning into this, congrats. There will be some upgrading work and also infrastructure works ready for all the most of the airports over there. The allocation this year, I think, is about 2.3 billion. So it includes enhancement work for the KK International Airport, Miri Airport, Tawa Airport, and also upgrading of the Kuching Airport. Once again, so when we talk about infrastructure upgrade, airport upgrade, these are considered infra and also I would say commercial, maybe a bit more commercial. So companies that are based in Sabah and Sarawak and doing infrastructure work, it's likely that they would be somewhat benefited. I think this one is very straightforward, right? And then if you want to go a bit one step deeper, perhaps it's into the value chain. There could be construction material companies that are based over there. So I think there are really quite a number of companies that are ready into Sabah and Sarawak that are tendering projects, including some of the IPOs that came on late last year, and then got listed this year. One of it. and also a couple more, mega size construction infrastructure companies, right? So if you are able to think of some other Sabah and Sarawak companies that are into the infrastructure work, feel free to comment below and share with everyone. Perhaps we can use it as a discussion during the Q&A session later on. All right. So I think this one very straightforward. DE capital allocation is towards Sabah and also Sarawak. But what I want to emphasize a bit more is into the consumer sector, which I always like the consumer sector. I'm a bit risk averse, kiasi a bit in Chinese. So consumer sector, if you look at what we have in budget 2026, we have several initiatives and all this support to tackle the rising cost of living issue. So we have Sarah over here, 100 ringgit to be given to 22 million Malaysian that are 18 years old and above. So we have another targeted 9 million Sumangan Tunai Rama STR for for 9 million person that are eligible. They would receive up to 100 ringgit per month basis. Okay, of course, there are also an earlier 100 ringgit SARA that allows us to go to selected stores. We'll talk about that later on, selected stores to buy our daily living goods, right? There are further, this is something I would like to discuss a bit further. It's about food security. So there are further support, not a lot of people talk about this, further support towards the agriculture sector actually. Paddy farmers, they get 2.62 billion, and then Agrobank, 1.1 billion financing, and also there are additional benefits for smallholder. Smallholder means these people are in the palm oil plantation sector, but they are not people like LI, they are not people like United Plantation, they are not Sime Darby. They are very small players that they own a very small parcel of land, maybe couple of, maybe in 1 hectare, 2 hectare, this kind of size. And of course, when compared to scale, unit cost, all these things, they couldn't compare to the larger player. But we still need the contribution from smallholders. And also, of course, from paddy farmers. Up until now, we are still a net import in terms of rice, if I'm not mistaken. So all this about food security, it would effectively somewhat lower down the cost of food, which is very important for our daily life, and also the subsidized product. These are very important. But on a broad-based level, one more thing I would like to highlight is that the a bit more attention into the gig economy, right? So gig economy, we have e-hailing or p-hailing. P-hailing, so delivery of food, delivery of things. They would also be entitled to something called iSaran Plus scheme. For benefit is 600 per annum, or it's 6,000 alongside their lifetime. So there will also be a self-employed social security scheme for those who are self-employed, right? Again, government servant grade 56 specifically, they will receive special financial aid. So all these things basically is telling us that perhaps the spending power per individual, it could increase in simpler terms. So if you don't want to remember all these things in simpler term, everyone get a slightly better spending power. Now, this is unlike the back in COVID times where people have a revenge spending, right? This is a more normal basis, and this is not revenge spending. So people realize that the cost of living has actually increased. So they are more towards, they are prone towards more staple, consumer staple, which are the things that we need on a daily basis. And then based on the SARA that has announced earlier this year and also all these initiatives, so you may already imagine some of the companies, they may be benefited, right? So companies like, of course, these are not listed, Mydin, Lotus, and then EconSafe, and then those listed, perhaps it would be 99 Speedmart, and then we have EcoShop, all these companies, because they may be benefited from the SARA. We might see a short-term spike in 1 or 2 quarters in terms of the spending. Because if you don't spend your SARA, it will be allocated. So Malaysian being Malaysian, you need it or you don't need it, you will spend it. That's the nature of Malaysian. So this would, in some sense, it would boost the revenue for the consumer staple industry. So overall basis, if you look at how does the capital market react to this news, actually the consumer sector on an overall basis has already rebounded quite strongly. If you look at Bursa Malaysia Consumer Index, it went down to 400 something points in mid of this year, maybe in the April, May. and it rebounded strongly to 500 something points on a year-to-date basis, 550 or so. So consumer stocks, a lot of them, they already have some very good performance, including we have two listed companies that are doing water specifically, drinking water and mineral water. They are also experiencing a spike in terms of share price, right? One is the Sabah side, again, Sabah related. Our next slide is going to talk about Sabah also, a bit more Sabah and also consumer, right? Life Water Sabah, one of the company that's performing. Another one is this Spreezer. So I always say, if I have the opportunity, I always tell people that water is a very special business. It's very hard for foreign countries to come into Malaysia and steal market share. Why? Unless they have a plant in Malaysia, such as Seamaster. Seamaster is not listed, but they are under a company called RO Water Sdn Bhd. It's a private company. I actually took an initiative to go and dig a bit more information. Unless you are like Seamaster, they're generating, I think, 230 million in revenue back in 2023 financial year. They could be more now. Unless you are players like Seamaster that you have a plant in Malaysia, from foreign, logistic costs into Malaysia is very expensive. You are transporting water from one place to another place. So the transportation cost by nature is quite expensive, right? So they have a certain natural competitive advantage in this industry. Now, next, tourism and also hospitality industry. Sorry if I'm going a bit fast because I need to save a lot of time for Vanessa later on, right? Tourism and hospitality sector, actually one of the key things that if you look at the budget 2026, individual, we could get a additional 1,000 tax relief if you are having, your holiday over in Malaysia. So more traffic jam maybe, perhaps it's good for, certain industry, but that's for the personal spending. Again, all these additional tax relief, they would come into higher spending power, right? And that would be back to consumer sector. But if we talk about pure play tourism and hospitality sector, immediately probably you can imagine some of the companies that are two companies that are doing aviation, right? We only have two. One is doing short haul, one is doing long haul. Another one, airport, is effectively privatizing. Another one, airport mall owner, their REIT has listed, but the KLA 2 mall has not specifically been put under the new REIT structure, right? So you know the names Asia, for example, Capital A. The one that got privatized is the airport. So all these companies with all this initiative by right, they would be benefited, but we need to evaluate whether the share price has already justified. So under budget 2026, we have quite an ambitious aim. We target 47 million visitors into Malaysia and 329 billion in tourism revenue. And there is a allocation of 700 million to actually boost the tourism sector, 500 million towards urban improvement by DBKL, so that when people come into Malaysia, they see, oh, very nice street, all these things, and 76 million to upgrade transformation center facilities. They come into Malaysia, they would feel this is a very modern kind of place, right? It's not rural specifically. Now, apart from the aviation sector that I just mentioned, actually some of the more traditional play companies, I would say, hospitality specifically, which are REITs. So there are mixed, I would say, mixed REITs or pure play hospitality REIT. They will also rise in the occasion with this tourism and hospitality sector. But again, one of the flip side of the rising risk of everyone knows the influenza now is spreading. Everyone, please be careful. So one of the flip side of it is the rising cases of influenza, which could impact this part. So hopefully nothing happens, right? And the tourism sector, I think, is very straightforward. It's something cyclical. So now that the government is boosting this, definitely tourism and hospitality, some of the REITs, I think, has not been re-rated yet. Some of the REITs, you can have a look into the REITs. I think they are still sleeping. I would use the term sleeping, right? So a bit more boring. But another one that it's more interesting, I didn't put in the slide because I want to specifically share with the people who listen in now, is medical tourism. Now, medical tourism is something that the foreigner, because of the cost advantage or the advancement of medical technology, they prefer to come into Malaysia for the benefits. So let me give you an example. We have one company in Malaysia specifically that's doing medical tourism. They're doing quite well, Alpha IVF. So they're doing IVF specifically is to making babies in a sense, right? So this company, they have a lot of foreign clients with pushing of tourism, hospitality. It may or may not also benefit them, right? So this is also one of the sector to look at as alongside with the other I would say healthcare stocks that are doing hospital as well, including one just got listed not too long ago, and the one Sunway is planning, which is in on the way for listing. Now, if you look at everywhere, I think has been a lot of time that people talk about infrastructure, including consumer and banking. I'm sure a lot of people has already talked about this specific industry, but not a lot of people talk about water. For some reason, I like water, right? But water here is a bit different from the spritzer and so life water that we mentioned just now. Water here is the sector-based that the infrastructure that is supplying us clean water. This is not mineral water. Under the budget 2026, there are a lot of terms that are talking about the water infrastructure. So some of the examples over here, Pengurusan Asset Air Berhad is planning to invest 13 billion over the next 5 years for water treatment plants across Malaysia. Now, and another thing that every state is having a headache is the non-revenue water, NRW, which is critical to each state's revenue, right? A lot of loss. I can tell you that to your surprise, there's actually a chart, a public information. Many of the states actually lost 40 to 50 and maybe up to 60 in some states in terms of their revenue from the water, which is a huge losses to the state. And then we have a lot of, I wouldn't say a lot, sorry, shouldn't use the term a lot in comparison, but there will be some allocation into rural infrastructure projects, urbanization, and 700 million specifically for utilities. So utilities also includes the water and also electricity. Then another part is the smart meter. So let's go into this one by one. So what is non-revenue water? Basically, this is the leakages, inaccurate measurement of the water, actual water consumption. So they processed the water, but they couldn't really recoup their investment, recoup their operating cost of it because it's non-revenue, right? As the name suggests for them. Now, data center, we have a lot of data center. So if you have the time later on, we probably talk a bit about the data center. But in fact, in Malaysia, actually, there are some, ground talks that we are not so aggressive in taking on new data center projects already because they're taking up a lot of utilities, be it water infrastructure and also electricity, right? They're taking up a lot of these kind of resources. So Malaysia itself, we have a lot of investment into pipe renewal. One of the thing I didn't put in here is the pipe renewal. So at one point, you have seen that a lot of pipe manufacturer they actually perform in terms of share price. And another thing to talk about is the non-revenue water part. Non-revenue water has always been a headache for every country, and Selangor, Selangor has gone into a very good number, which is 27.7% non-revenue water. It's considered a very good number. So actually, they got rewarded by 362 million, which they could use for capital expenditure again to improve their numbers, or they could use for operating expenditure, right? So other states they are also moving towards this non-revenue, lowering their non-revenue water percentage. But how? One of the thing is that they could implement more IoT or smart solution into it, right? And one of the thing is the smart meter. A lot of people don't like smart meter because after implementation, suddenly their bill would increase, right? Because there used to be some leakage previously, it could be then. So one company that I think for many years, people, not many years, maybe 2 years, nobody really talk about. Perhaps it would be not a Baiqua, by the way, it's a Cosmos technology. Last time they do oil and gas and also water technology items specifically. If you are in the industry, engineering industry, I'm sure you know Siemens. So they are the, I would say, implementer to track the leakage and all these things. So a lot of things happening around on the back. And then in terms of water treatment, there are companies that are listed this year, such as Pan Merchant. I think Pan Merchant, they have a certain technology to help with the wastewater and also the water treatment industry. So all these things, it may materialize or may not, but these are some of the things, interesting companies that we can, have a look at. And then one of the IPO that are upcoming, I think they are listing on 27 this month. Insight Analytics, they are also doing analytics solutions for the water in Sarawak area specifically. So this is one IPO that many people has been anticipating. Very interesting, right? So all these companies related to water, I don't think a lot of people has been aiming at water yet, but it's definitely one of the things that if you look at the budget, look at the overall development landscape in Malaysia, it does definitely deserve your attention. Okay, now one of the things that I've talked about a lot about the positive upside, right? But I need to talk about the downside risk before I pass it on to Vanessa. So we have in fact now the trade war risk and tariff, which is the geopolitical risk. If this were to worsen going forward, as for example, our outlook remains looming. Export-based companies have a export restriction or they have a high, what we call tariff, right? Transshipment, all these things that could happen. It would impact our local companies as well. And one thing that is not monetary, may not be monetary, is the technology transfer that the MNCs, they are not willing to come into Malaysia to set up and benefit in terms of hiring, a lot of spillover from there, hiring, technology transfer, all these things may not happen. This is one of the key risks. And then carbon tax 2026, this is also one of the key risks for some of the sectors I mentioned just now. If you came in a bit late, probably iron, steel, and also energy hungry industry specifically, or in the heavy industry that are emitting a lot of carbon emission. And sustainability reporting, this is something a bit more trivial, but I think many ACE companies, they are not ready for sustainability reporting. You might see some of the companies potentially, they might not able to deliver a very good sustainability report. Whether it will be penalized by the Bursa or not, we do not know yet, right? And then now in terms of the market, I think it has recovered a fair bit and a lot of positive sentiment has already recovered. So one of the things that I noted that people start to talk about the stock market more actively as compared to a couple of months before. So we know that a lot more optimism and also expectations has came into the market. So if in November, which is next month, another week ahead, a lot of companies they fail to deliver the initial results that they expected to deliver. It could dampen the overall market sentiment despite all these positive plus points from the budget earlier. And lastly, of course, one of the key risks to consider is the unknown, which we do not know what are the what we call the black swan event that could come, right? So the gold price has just crashed not too long ago out of nowhere. So I think earlier on, actually, I think that prompts to happen when you go up together in tandem with the whole stock market and also US dollar, which previously have not been happened before. So what are some of the things that we need to be a bit careful on? And so I would like to go through here and then I pass on to Vanessa. And so far, even though the risk warning and all these things, based on my own bias, I tell you upfront first, bias observation. I think Malaysia itself, we are still quite positive in everything in all this development, and especially in the consumer and also some of the sectors that has been overlooked. Now, if you are into some of the infrastructure and also commoditized industry, always remember that sectorial is always cyclical, which means they always have a cycle. Just for example, like even construction, right? They have a period of recognizing the revenue in an S-curve basis. If you are accountant that doing for construction company, if you are in construction company, you know that there's a S-curve in revenue recognition, which means at the initial stage, your recognition is peak, then you go down, and then you go back up at the ending stage, right? So there's a S-curve. And extreme optimism is not really extreme yet now, but I would remind investors that if you just joined the stock market, I would like to remind you that back in 2020, when the market is too hot, when people are buying into companies without understanding what the company does, that is what we start to call extreme optimism. Then I think it's a time, to be a bit more careful in that. But otherwise, I would say to close this my session with stay invested. It could be scary, but I think if you are always risk averse, you might miss out a lot of upside, right? Even though I talk about risk a lot, I still stay invested in some of the safer industry. So that's it. I would save more discussion overall later to Venice for the afterward session. So over back to you, Shane.
Thank you so much, Max, for sharing with us the budget 2026 analysis. Okay. So if any question for Max, you may type your question in the Q&A. Yeah, so we will go to the Q&A after the presentation of the next speaker. All right. So may I give a brief introduction about her? She is the Warrant Specialist at RHB Investment Bank, where she applies her comprehensive knowledge in equity derivative and wealth management. She regularly conducts seminars and webinars on structured warrants to her clients nationwide. Prior to her current role, she had 6 years of experience in wealth management, which included expertise in structured products and adeptly handling a diverse range of client portfolios. She's a dual license holder of CMSL from Securities Commission Malaysia and holds a bachelor's degree in economics from University of Malaya. So she's none other than Miss Vanessa Tong.
Hi,
So Vanessa,
Shane.
how are you today?
Good. It's quite good, I think.
Good
And the highly anticipated event
good to
tonight.
have you here.
Yeah. Good to
Yes.
see you
Would you
guys.
want to turn on your video
Good to see
camera?
you
Okay,
too.
fantastic. Yep. So remember to pay attention in her session, yeah, because we will be having a quiz later. So if you pay attention, then chances for you to win in this quiz, would be very high. All right. So over to you, Vanessa.
Thank you, Shane. Hi, everyone. Thank you so much for joining our session today. And thank you so much, Max, because every time when I join Max session, I definitely learn new stuff from him. Okay, so today there will be like 2-in-1 session. So today we have Max who actually shared on his views and also what is the relevant sectors of post budget 2026, and then my turn. I'll be sharing more on warrants. So it will be a slightly more technical as usual, because for warrants, they're actually it actually derives the value from all these mother shares, the underlying like uh, index or maybe underlying stocks. Okay, so with this, you need to have good knowledge, basic knowledge in trading shares, as well as with that, you can actually apply it on warrants trading. All right. So disclaimer that all of these information are only for educational purpose only. Okay. So there's no buy call or sell call. So it's basically if you have made any investment decision, that's actually up to you. Okay. Yeah. So today's agenda, we can actually help to identify suitable warrants relevant to budget 2026, which actually affects all of us as rakyat Malaysia. Secondly, utilizing available tools, such as warrant search, metrics, and so forth. Third, it will be more on managing your FOMO, fear of missing out. So it's more on emotional, and also how do we actually counter it? Okay, it's a bit hard lah. And then last but not least will be quiz. So you'll be the best, and then you can actually win 50 ringgit from us. All right, so this will be slightly intermediate session, but then I just want to run through on what is structured warrant and company warrant. So guys, if you are already trading warrants, right, please let me know in the chat. And if you have not, then you also let me know so that I can actually gauge whether you are more the crowd is more a beginner stage or intermediate. All right, so then I'll see how do I actually explain more, because from all my experiences that I see that if that the crowd is actually more on the beginner side, right? So if I talk too much about technical stuff, then it will be very boring. Okay, so put your comments below in the chat. So just a brief introduction about structured warrants and company warrant. It's very basic. Structured warrants, like call warrants and put warrants, they're actually warrants instruments issued by financial institutions. So recently, besides from RHB Investment Bank, Maybank, Kenanga, we have seen Macquarie Securities, CLSA, that's actually a new issuer. So they are the financial institutions that who actually issue warrants, and we call them warrant issuers or market maker. All right, so for company warrants, like some of the companies, they actually issue their own warrants. All right, so it is directly issued by the company itself. The price are actually determined by the market supply and demand, so there will be no market maker. So for warrants, structured warrants, yes, there will be market makers. There's RHB Investment Bank and the rest of the issuers lah. Okay, so the expiry date for call warrants, right, or put warrants, is actually very short. It's actually as short as 3 months for some of the warrants, like the index warrants. So you will see it expiring very soon. And then for company warrants, it's normally longer. Yeah. So settlement method, one is cash settle, another one you can actually get it in shares. And stock code CCW for call warrants, H or PW for put warrants, and stock code WR for the company warrants. Okay. So now, for warrants, it's actually important for you to consider all the factors such as the exercise price, leverage, exercise ratio, expiry dates, and so forth. So it's really, really important for you to know how to select it and also maximize your opportunities. So you can actually do it technically and fundamentally. So today, as we actually talk about the budget 2026, right, it's more on fundamental. So fundamental, it actually you will definitely have set a view on, depends on which sector you have. So earlier on, Max actually shared on the consumer products and so forth, like for example, eco shop. So this is actually a more fundamental. But with that, for you to invest in this particular stocks, for example, eco shop, you will actually have to apply your technical knowledge onto it. Yeah, technical analysis and so forth. So with this, maybe I'll just share with you some of the past performances for some of the warrants, because they are actually budget related. For example, EcoShop CR. So 1 month, I actually gotten the data from the RHB warrant website. 1 month from 23rd September, the shares actually went up by 15.83%. But for warrants, so for warrants, it actually went up by 118%. So imagine from here to here. All right, so the warrant actually gained a lot. So I will just share with you on the live warrant website. Okay, so it's very easy. Just go to the warrant website and then just choose. There's so many eco shop, right? So we actually look at eco shop CR, and then it's actually traded from 24th. It was 7 cents, and yesterday when I was doing it, it was around 12 cents. So it's about 118% gain. All right, so this actually tell us about what is the leverage factor and also what is a leverage power from a call warrant, because for call warrants actually move in the same direction as the shares. So if the share goes up, call warrant will make money. But on the other hand, if it's a put warrant, eco shop will actually if eco shop goes up, then your put warrant will actually make losses from there. All right, so this is for eco shop CR. So secondly will be CMSB C66. So CMSB Cahaya Mata Sarawak Berhad. So it's a call warrant. So this is definitely related to the Sarawak play. Okay, so even before the budget day itself, right, it actually garnered quite a bit of interest on the warrants and also the mother share for sure. So during the day of budget, it actually was one of the highest traded stocks as well. For CMSB C66, it's actually one of the very popular CMSB call warrant in the market. Okay, so for the shares, it actually went up by around 28%, while warrant went up by 214%. Okay, 214%. So it's about like more than two folds. One fold, two fold. Okay, two folds. Yeah. So this is actually a chart on a very simple chart on CMSB C66. It will be available on the RHB Warrant website as well. Okay. Yeah. So another one which I would like to highlight will be on high mobility. So recently we have issued a call warrant on high mobility, high CD. This for the shares, it actually does not impact it directly from the budget itself. However, we actually see quite some movement before the budget Okay, so I actually want to mention these stocks and also this warrant is because for warrants are actually a very good it's actually a very good instrument for us to trade intraday or maybe a very short-term trading for about 1 or 2 days. All right, so I will just share on one day, which means on the 8th of October, 3 p.m. to 4 p.m. So I actually extracted this today lah, huh? So today, actually I just look at the candlestick and then I get to know what is the highest and lowest point on in that candle. So the lowest point was 2 ringgit and 41 cents, while the highest point is 2 ringgit and 56 cents. All right, it might sound very good to be true, but this is actually just an example for you to know how does this warrant can be traded on one day in an hour. Okay, so shares on that during the hour, right, 3 p.m. to 4 p.m. it actually went up by 6%, while the warrant gained 13%. Okay, so if you compare two of these chart, I actually get it from RHB TradeSmart advanced charting. All right, so it does not look like the TradeSmart trading view screen as well. All right, so this is the mother share and then this is the warrant. So for warrant chart, warrant graph, you will see it very, very boring. It's not as informative as the mother share price, mother share chart, because you don't actually see the price movement if there's no one who's trading the warrants in the market. So normally it's actually based on the last traded price and then it will actually, generate this data and then come up with a chart. So you definitely cannot use a call warrant or a put warrants chart to do charting. All right, instead you have to use the mother share or the underlying to do a charting. So with this, right, warrant actually gained from, if I assume the lowest was 11.5 cents and then it actually went up to 13 cents. Yeah, so this is just an example. So there are definitely different kinds of investors who are trading warrants every day. So there are also scalpers who actually scalp 1 or 2 bits from a trade. All right, so it definitely depends on you on how do you actually look at it and how do you trade warrants. All right, so for this one, which warrant is better? This will be directed to those who actually hold for longer term, because I actually compare it using 1 month performance. All right, so who wants to tell me which one is the best for you in your eyes? EcoShop CC, EcoShop CD, or EcoShop CR? Guys, you can put in the comment section so I can know your answer. Okay, there are also people who actually likes it to be, less responsive, less sensitive, because you can actually get a better gearing effect, and also you don't want it to be super fast so that you can manage your risk, you can run away from your trade. All right, there are also investors who wants to trade it faster so that they can scalp 1 or 2 ticks and then they just chow. Yeah, so there are different types of investors. So I actually compare EcoShop CC, CD, and CR because we have 3 EcoShop warrants in the market right now by RHB Investment Bank, and then it actually recorded different past performance, even though they are all call warrants, but then one is like 52%. Not so, I mean, it's good, right? But then it's not so good compared to CR. All right, so this actually tells us that effective gearing matters a lot. Yeah, so maybe I can just go through a bit of, for those who actually have not traded warrants before. There's 2 main things I want to explain to you, which is the first, effective gearing. When you see a times means multiplier, right? Means that 1% movement in the mother share will give you about 2.8 times gain in EcoShop CC. So this is like a multiplication. So you see 2.8 times, about 3 times lah, 3 times, and then this one is giving you 5 times for CR. So besides for effective gearing, then you have to know what is sensitivity of the warrants. So the ticks, lesser ticks means faster. So 1.5 ticks means that it will move very fast compared to 1.6 ticks lah. But actually does not matter, because I'm going to show you how to compare using a live price matrix later on. Then at one glance, you will be able to identify which is the best warrant for your trading strategy. Okay, so I actually have shared a few. These are actually not a buy calls, but then it's actually more on the relevant warrants that is linked to the to budget. Because I would say that in the market, right, in Malaysian market or the stock market, everything is just, it's happening around us. Everything is happening around us, and then we really don't have a certain sectors that is, confirm will go up one. Yeah, so that is why we have to follow more on the research reports and also some of your own technical analysis to identify which is the best stocks and also best warrants to trade. All right, so maybe I just share a bit on RHB Investment Bank. So RHB Investment Bank, every day at 8 a.m. in the morning, we will have this very, very exclusive session for our clients or maybe our followers on Facebook, RHB Morning Kappa at 8, if you have not known. So every day, every morning, the research analysts, like me, or maybe like me, Warrant Specialist, will be sharing the research reports and also our technical views on certain shares every day in the morning, like news reporter. So if you would like to have more of this information to know what to trade in the morning, then you can definitely follow RHB Morning Kappa at 8 on Facebook. It's a bit old school because we still use Facebook, but then I would say it's quite effective because you can still watch the playback. Okay, all right. So wow, thank you so much, Eugene. You mentioned that the Telegram group is very good. Yes, because we will share RHB Investment Bank official, okay? RHB Investment Bank official, don't follow the scam group, okay? We will be sharing every day we'll share on the new research report, newly published research report, as well as the technical analyzers. And a lot of information. Sometimes you think it's spamming you, but then when you really need them, right? If you really need them, we're always if you really need us, we're always there for you. Yeah. So actually I see a few answers to my eco shop question. So some have chosen CR, some said CD is the best. Yeah, CD is actually quite good. Some CC. So for all these warrants, right, they are best in terms of when do you actually invest it. And then I'm going to share with you later on how do we identify which is the best. All right. Okay, so before that, one thing to know is the leveraging risk. So this is a high CD, high mobility CD. Just now we see so good, one day can make so much money. But then there's also leveraging risk in all warrants. So look at this drop. It actually in a few days time, 5 days time, actually dropped by 31.42%. Yeah. So the mother share, I think it dropped from around 17.5 cents to the warrant price dropped from 17.5 cents to about 12.5 cents. Yeah, so this is what we need to know about the leveraging risk investing in warrants. When you make money, you make very fast, but when you lose money, also very fast. Okay? Yes. So, so many advertisements. So if you want to know more, we'll be at the Mid Valley this weekend, okay? 10 a.m. to 9 p.m. at Mid Valley Exhibition Center. So if you are free to drop by, my colleagues from RHB Investment Bank and also myself from RHB Warrant will be there for you. So if you have any question or you have complaints or you have so many things to tell me, right, I'll be there. Okay, so I'll see you this weekend, 24th to 26th. I know that there's some road closure, but I believe that if you want to be there, you will be there. Okay. Yeah, so some warrant selection. How do we actually select warrants? So now you have to now you have to pay more attention on it because there's so many questions about warrants, right? At the during the quiz, because it's about a warrant quiz. Yeah, so what you need to know is that besides from a very basic the underlying versus core warrants and what is core warrant for warrant, no more, because it's 50 ringgit for 1%, right? So you need to be very, very good. Okay, so I have explained to you what is this effective gearing, which is a multiplier, and sensitivity 1.5 ticks, and I will show you later using the price matrix. One thing that I really need your attention will be exercise price. So when you see issuers issuing warrants, we have set something called the exercise price. So in the forums, a lot of people will say, if this issuer issued Nadia speed mark. Okay, for example, now it's 3 ringgit 32 cents. Oh, if this issuer issued a Nadia speed mark C100 is 4 ringgit, oh, means that they're super bullish. Okay. Or maybe if they actually issued some of the warrants that's below the spot price or the market price, it's this one's super bearish. Half true, half wrong, okay? Because we for warrants there's actually a lot of variations in warrants. If for an issuer like us, like for example, we issued something that is out the money, the exercise price is below the current spot price, right? You actually see this warrant to be less sensitive, but then giving you better effective gearing. Means that the warrant can actually give you can actually gain more from the warrant, but you need to be patient. But if the issuer has issued a warrant with exercise price that is higher than the share price right now, like for example 3 ringgit 32, I have issued something that is less than that. So that will like for example 2 ringgit, so it's in the money already, right? Your share price is higher than your exercise price, it's in the money. Then you will notice this warrant will be slightly more expensive in the absolute price, but then it will be more sensitive, which means that you will earn less, but then it will be more sensitive, you will make money faster. All right, so this is how we actually set our exercise price, and that's one thing. So this exercise price is going to affect your moneyness. So you will see this on our website every day, like change your moneyness. It's because the mother share change my up down, then the moneyness will go up and down, up and down. So if currently the SP mark is 3 ringgit, is 2 ringgit and 70 cents, and then the exercise price is 270, right? Means that it's at the money. Yeah. Wow. Okay, it's already 9:27. Okay, I will quickly stop this soon so that we can go into quiz very, very soon. So another two things that I want to share with you, which is premium and implied volatility. Okay, so this one I have no slides also because I want to learn from Max. I want to like test you, whoever is like listening. All right, so premium does not indicate directly whether this warrant is expensive or cheap. All right, so as issuer, we are like the seller. We can actually price this thing, this is our product, to be more expensive or cheaper. Correct or not? So premium is actually an indication, but then it does not tell you directly whether it's very cheap or very expensive. If you see very low premium, it could mean that this warrant is already in the money, like this one, like SP Mark C15 is in the money, or it's very, very close to expiry. So when it's close to expiry, very little time value, and then the premium will be very less. So it doesn't mean that it's really cheap, okay? All right, so for premium, it actually means that this is the percentage that your underlying shares has to move. Means that in this case, your underlying shares with 99 speed mark has to move by 3%, move up by 3% for you to break even if you buy it now, and then for you to break even if you hold this warrant until expiry. Okay, so if you buy this warrant and then you want to hold until 154 days later and you want to break even this trade, an speed mark has to go up by 3%. All right, so it actually does not indicate directly, as I said, because you can actually buy it today and sell it tomorrow, so it won't actually affect you that much. Whereas for implied volatility is the main factor that directly translates to whether it is cheap or it's expensive. Okay, so yeah, so this is some of the tools that we use, like warrant search on RHB warrant website and warrant metrics for you to compare. Okay, now I have to show you how to use it. But then, which one I use? Okay, Johor Plantation. So this is Johor Plantation group. I will just share with you how we actually use it. So you go to Google and you search RHB warrant, then you will see something like this on page 1. Okay, so this is how it actually looks like. So besides your RHB Investment Bank, you will see this website on Macquarie, on Maybank, Kenanga, because all the issuers we will have one warrants website for you to check on your warrants, especially warrant issuers with live price metrics, right? It's very important. So you just go to warrant search and then you filter lor. Just now I mentioned on JPG, right? Jaw Plantation Group. JPG, then this is Jaw Plantation, and you can choose whether you want to see just RHB or with other issuers. I recommend you to look at just RHB. okay, joking. Go to all issuers. So what do I normally do, right? I will do first sort according to exercise price, because I don't want something that is very expensive, which means not expensive, which means it's the absolute price is very high. Absolute price means the warrant B&R's price. So if you see 15 cents 1.5 compared to 2 cents, you know that you are going to make more money in 2 cents than 15 cents. But in the matter of speed, you don't know which one faster. Yeah. So but normally I will just use exercise price to see about the same lah. So 1 ringgit 53 cents, right? You actually look at all these three RHB, CN, CL, and CK. All right, so all of this, and then make sure that it's not expiring very soon. It's very easy to look at the expiry date. The sensitivity is okay, like means 1.4 ticks, 2 ticks, it's quite fast. 1.4 ticks, in fact, is very fast lah. Like this RHB 1.4 also very fast. Means that it will flip up and down very soon, very quickly, that sometimes you cannot stop loss. Yeah, so CN, of course, CN is the best because it's slightly in the money. It's higher than the exercise price, and then it's giving you an effective gearing of 4.9 times. It's like about 5 times long. How do you actually look at it? You look at the bid price of the warrant, the B&R's price lah. So as long as it's a tight B&R's, and then look at the absolute price, it's actually not very expensive. Then you know that it's actually quite good to trade. So click onto it, JPG CN, and then you were able to see this thing called the live price matrix. Okay, so you will see how quick is the warrant flips in accordance to the warrant on the mother share movement. So this one 1.4 tick, 1.9 ticks is about 1 to 2 ticks. So sometimes 1 tick you will see 9 cents became 9.5 already. Sometimes you require 2 ticks from you. So 1 cent, 2 cent in the mother share, and then you will see that warrant will make 1 tick of profit. So if you buy in the market from RHB, from the market maker, you buy at 9.5 cents. You want to make money, right? From 1 ringgit 55 cents, it has to hit 1 ringgit and 58 cents for you to make money, and you can sell it at 10 cents already. Yeah, so this is how we actually look at the live matrix. So if you think I don't want just look at one JPG, I want to look at all 3 JPG, go to the warrant matrix side, and then you just put in all the JPG warrants, and then you can compare side by side. Okay, so you will see from here, it's at if you see it as frequent as I do, right, then you will actually at one glance you know that you will actually buy JPG CN. If you are bullish on JPG, you will go for JPG CN. You see the sensitivity, which means the flipping is very similar, 1 ticks, 2 ticks, right? But then look at the absolute price for JPG CN is cheaper than CI, which means this one will actually make more money, even though the share moved in the same pace, like 2 ticks, 3 ticks, right? But then you'll make more money from JPG CN. So we call it the effective gearing as well. Yeah, so this is how we actually identify which is the best warrant at that moment. Because exercise price are always different, the share price always been moving, right? So you know that you cannot just fix at one warrant. You have to change your warrant, you have to switch your warrant, and especially with the expiry date. Next will be CMSB. There's another example I've shown earlier. So CMSB, Jaya Mata Sarawak Berhad actually recorded quite a good gain. And today, guys, we actually see a very high trading volume in CMSB stock and also the warrants. Okay, especially CMSB 666. This traded volume is about 6 million. If you compare to average among the peers, right, it's actually quite high. Yeah, so some of you would actually sort it according to the traded volume to see which is the best highest traded today. But then sometimes highest traded could not be the best, because sometimes it's very near to expiry, or maybe people just like the number like 88, 78, 68, and then they just go and buy, all these rich people. All right, so what you need to do is that first you can actually sort it according to the exercise price. Okay, so it's about 150 cents lah. So this will be the best, some of the best, because it's very close to the share price. And then next you will look at the sensitivity. 0.9 ticks is possible, means that one tick, you will actually move like the shares already, one tick. But it's very cheap, so it's 9.5 cents. So CIMB always very cheap. So you can actually get one tick, but then effective gearing 9 times. One thing good about it is that if you make money, you'll make very fast. But then if you lose money, you'll lose money very fast also. So yeah, so this is what is good about less ticks of sensitivity. Okay, for CMSBC 66, I would say it's good lah, because expiry date is okay, 28 January. Sensitivity is about 1 to 2 ticks. So 2 ticks, sometimes you can still run away from, if in case that the share drops, right? Well, effective gearing is 3.9 times. So the bid price 11 cents lah. Sorry, or 4.1 times 4.1, and then the bid price is around 11 cents. So it's not too expensive, but it's not very cheap as well. Yeah, so just do the same. As I mentioned, look at the price matrix. So now I want to share with you, just now I mentioned about how to determine whether the warrant is cheap or expensive, right? We look at the implied volatility. So this is an example. Sorry, I highlighted here. Okay, but I want to tell you what I want to tell you. You look at the implied volatility over here. I actually highlighted these two, CMSB C70 and 71. It's not, I'm not directing, I'm not saying whether they are good or bad. I'm just showing you what is the differences between different implied volatility, which means how do we determine whether it's expensive or cheap. Okay, so implied vol, if low means cheaper, 61 higher means more expensive. So provided that everything is the same, like the exercise price is the same, but again 30 cents. Exercise ratio is not the same, but then you know that CIMB is half, C70 is actually half of C71. So you can actually just make a multiplication from there lah, double up lah. And then this a bit tricky. This one I cannot compare, because I cannot compare like apple to apple, but apple to half apple lah, because the expiry date is about 3 months away, 3 months difference. But then both of them, they are still very far from today. So I assume they are about the same, maybe 1 or 2 ticks, about 1 tick differences lah. Okay, with this, what you need to know is that how do we see whether it's more expensive or it's cheap? So look at the warrant price. C70 and C71, one is 18 cents and another one is 12.5 cents. But remember that C70 actually have an exercise ratio of 1.5 times. So which means that this one have to times 2 lor. Yeah. So because it is half of it, so this one is 18 cents for this one, while this C71 is actually 25 cents. 125 times 2. So it's 125 times 2. Okay, 25 cents, correct. So this is actually more expensive in this term if you look at it like that. But how do you see it direct translate to how does it affect you, right? Besides from the bid price, you look at the sensitivity and effective gearing. So for C70 can give you 4 times of effective gearing with 1 tick only. Very fast, you will make four times. But this one, 2 ticks only, right? You have to wait for 2 ticks. Then only you make 3 times. Yeah, so you know that, oh, actually if I buy C70, it will be better for me because I can make more money in a shorter time. Okay, so this is how we actually look at implied volatility. Sometimes you see some warrants, right? They have a lot of people traded in it, but then when you look at the sensitivity, oh shit, it's like 6 ticks, 7 ticks, 8 ticks. So there are also possibility that someone who actually entered the trade, but then as the mother share is not performing well, or is breaking the support, they have to actually leave. They actually have to sell it back to the market, to the warrant issuers, and then they have to leave the market. And then with that buy and sell, right, you actually see a very high traded volume. That's one of the possibility. Of course, there are also possibilities that people buying or people selling lah, right? So this is how we actually look at the expensiveness and also whether it's cheap or not for all warrants. Yeah. Okay. 9:40 already. Okay, next. So these are the warrant selection. You can have a snapshot on this. This is my sharing only. How do I actually look at it? You look at implied vol, you look at the moneyness. It would be great if it's near to the expiry price. Third will be absolute price means effective gearing. So you want something that is slightly cheaper. You don't buy warrants with 20 cents or 30 cents because it does not justify why you want to buy a warrant, because it's expensive already. And last but not least is that you'll choose warrants with live price metrics. It's going to help you a lot in trading warrants. It's not like buta go and buy, right? You know where is the selling time and also where is the buying time. Some of the popular warrants recently, this is not, it's actually from some of the, it's not actually not published officially or not, but then just recently we see some trading volume and also some demand that we are selling. We actually saw some people buying and selling Farm Fresh Berhad C26, JPGCN. So these are some of the warrants in focus for us RHB warrants recently. But then overall will still depends on how the mothership performs. Yeah, so if the mothership can make it's like highly traded, like for example NextG, for example a lot like Gamuda, YTL Power, then it's also up to you. All right, so last but not least, we go to managing a FOMO. So it's very common because it's not only normal investors, some of the professionals actually they will face the same thing as well. First thing, FOMO is fear of missing out, means that you kiasu or kiasu, right? Kiasu, you scared that you're missing out from people buying and earning a lot of money, but then you're not buying and you're not making a lot of money as well. So you then after that you see people buy, then you follow. But what you need to know is that you have to understand warrants at risk. So I'm going to share with you. If you see warrants traded daily, top traded, this CWKT, I think is the best. I want to buy also because a lot of people trade, it's about 200 million plus. But then whereas it's actually a call warrant, and then that day Hang Seng Index is actually dropping. And then you go and follow people buy, and then you actually make losses. Yeah, so this is one of the very bad FOMO thing to do. But it's common for us to sort everything according to top 30 volume every day, right? But then you have to first understand the risk, because for warrants there will be time decay, so you cannot hold overnight. For index warrants, better not to hold overnight. Yeah, so because it actually move very fast, it's a futures, right? It's the underlying is a Hang Seng Index futures, so it's very important for you to know what to buy and what not to buy. Sometimes you will also FOMO also because people already make money. This 84 million sure all make money already because 10% up. They sure make a lot of money. But then if you look at the warrant price, buy and sell, there's actually a gap, a spread. So means that if you buy at 22 cents, assume that this is actually what's stated on their metrics then you actually buy it more expensively. Yeah, so it's important for you to go and check on the live price matrix. And top gainer as well. So this is this was yesterday. So you see a lot of people trade. You see this 1.6 million, 5 million, 2.6 million. Everyone is like making a lot of money. But then one thing I want to share with you is that if you look at your trading platform, it does not justify or just does not tell you whether it's really making money or not, because we use a reference price like yesterday's closing and then compared to the last traded price. So some people they go and buy at ask price, I mean what we set as ask, then it's actually higher. So people say, oh, this one, you see last traded is 16 cents, right? But actually in fact the FAB is 15.5 cents. So maybe that time the warrant has not moved yet, but then from this trading screen you think that it's already people are already making money. Yeah, so it's not true. And secondly, I recall some investors actually told me that they choose warrant, they will choose those, like for example this one, everyone has made money, right? All these warrants, and they go and choose all these 0% on, because they say, oh, because everything move already, but this one not yet move, so this one will move next. Okay, so this is not true. What you need to do is that to look at the live price matrix, and then first thing you have to know is that whether it's a very sensitive or it's not a very sensitive warrant. Yeah, so instead, how do you control your FOMO? You need to see that you need to know that high trading volume doesn't mean very good liquidity. And then you need to understand the specifications and expiry date. So the liquidity of warrants, right, is actually determined on the buy and sell queue over here. It's not here, it's not on the top traded or not, but then you have to click inside and look at the queue. Each side is a tight spread, like 3 cents and 3.5 cents. Both sides, right, has more than 100,000 units, and then you know that it's very liquid because RHB is actually market making for you on this warrant. So if you click here, DNOC24, no people trade one on today, but then does that mean that it's not liquid? It's wrong, because the liquidity determines by the queue, and we actually queue for 3 levels. So it's actually good for you to buy and sell. Yeah. So this is how you manage your FOMO, set a stop loss. So if you know that, for example, this Farm Fresh Berhad, there's a support price at 2.37 ringgit. You use this live matrix, then you know that if it breaks the support, means that it could go down, and then you can definitely set a stop loss at the price of 11.5 cents so that you can sell it right away. Or if you're very scared, right? You're scared that you FOMO again, you worry that once you drop, then it goes up, right? Then you can actually set your stop loss at a lower level, maybe about 11 cents or 10.5 cents, so that you don't actually lose so much. Yeah. So first thing, check the price, share price and warrant price. Secondly, to see what is the flipping points, up, down. Set a stop loss, and then the market maker will buy back according to metrics. So one thing that you need to know is that you have to buy warrants with issuers that provides live price metrics, so that you can actually check it from time to time. Yeah, if you are really risky, then it's okay lah, it's up to you. But then live matrix will help you a lot in trading warrants. Okay, so I have shared with you on all that, and then this is the summary for today. Yeah, so not to forget, we have a date this weekend at Mid Valley. If you are there to shop and spend your SARA STR 100 ringgit at Aeon Big, then you can still feel free to come and see us 10 a.m. to 9 p.m. All right, so yeah, that's all from me. Thank you so much, guys. Thanks.
So we are now going to Q&A. We are a bit behind schedule, okay? So the session will overrun for a little bit already. So the first question is asked by Peter Ling. Okay, this question is very interesting. I'm not sure whether we are in any capacity to answer. So the question here is, will the water company still go up in Bursa Malaysia market? What do you think, Max?
Honestly, I can't answer you outright, but I think I will combine this with another question that's in the Q&A box.
Yeah, by
But
Kennedy, right? Yes.
yeah, you by water companies, I'm not sure if you meant water, drinking water and drinking water and also mineral water company, but you can look at their historical PE for your comparison to justify whether the current PE and their growth rate can sustain their growth going forward. That's all I can say. And then if you meant other related what we call water companies, so there are a few companies that are involved in the industry. Taliworks, we have Rojas Technic, Salcon, Vida, I don't want to mention, but Gamuda, maybe AWC. So you have all these companies that are doing, I would say, contract work. Of course, you also have Waria Wastewater, Sungai Rasal projects, all these things. Then we have Intex that manufacture the piping, Southern Steel. I think Unitrade also do water piping manufacturing. So a lot of companies are there overall basis. Then if you talk about this industry, is it heavily the capex and the growth, is it heavily driven by the state government? The question is yes, the capex mainly came from there. And how would they manage the aging infrastructure? The answer is to renew the piping infrastructure, which involves, because piping, there's two types. One is underground, the one is closer to surface. If it's deep underground, then they need to dig it up and then replace. So and to minimize the water disruption is not something easy to do. So that's how they're gonna replace all this aging infrastructure. Of course, there would be also technologies to be installed or what we call retrofit in existing, not too old, a kind of piping, maybe 10, 20 years is considered not very old in this context. They can install a certain meter or flow tracker to see if there's any leakage, whether it's a geotechnic kind of technology or whatsoever. So these companies, they are also prone to be benefited by these infrastructure changes and all these things. Of course, companies like Insight Analytics, which are going to be listed soon, provides the technology function to monitor non-revenue waters and all these things. They are also one of the companies to tackle this non-revenue water. Is there any federal authority? The answer is yes. We have Kuching Water Board. We have AIS Langor. All different state, they have respective industry for your context.
All right. So thanks for sharing your perspective on this water industry. The next question is by Eugene. Will road maintenance companies benefit? Seems like one of the sectors that is overlooked by most analysts.
Yeah, I think one company, thank you, Eugene, for also mentioning SPAN. SPAN is the certification body, whether to define this company is qualified to work in the water industry, quote unquote. And then to answer that question, road maintenance. Road maintenance is something that a lot of companies can do, but also at the same time, if you look at road maintenance, is very subjected to usage of the road. It's something that is quite fixed, and the growth rate is actually quite similar in terms of the toll prices growth rate. So I think one company is doing that, UAM Magenta. Otherwise, the other road operators, Prolintas, they also have internal division previously, yeah, if I'm not mistaken. So is road maintenance a very good business? I would say it's more consistent is in terms of owning, but I think the infrastructure part doesn't mention a lot in terms of specific road, um, what we call maintenance. And then so much even if you're talking about private owned highways and roads, all these things. Yeah.
All right. So the next question by Yuk Long is that why is Aeon not benefit from the consumer industry? So that's his question.
By not benefited, I'm not sure if you meant their financials are not benefited because their next quarter will come out on next month, which if you compare on year basis, I would say probably they are benefited. Uh, but if you talk about share price, Aeon is a stock that, in terms of the other retailer players, not a lot of people talking about Aeon. In one of my sharing last time, I actually talked about Aeon. If you go there, you notice if you look into their annual report, you notice that they are not only doing Aeon specifically, they also have other, I think Miniso or the other brand, couldn't remember correctly. So they have different brands that could culture growth, and consumer sector wise, everyone in the game should be benefited. Of course, they are not selected for the SARA. That would not have the certain spike in terms of their earnings for the shorter term. So in terms of consumer product, right, over the shorter term is a zero-sum game. If I bought something here, milk powder, I wouldn't go and buy it from another place. So it would be a shorter term impact, but over the long term, stronger spending power and all these things, internal consumption, so should be quite okay.
All right. So the next question by Juan Salasia. So should we consider technical charting if you want to trade warrant? Vanessa?
Hi. Yes, you definitely have to use technical charting in trading warrants, because if you want to have a look on it, as I shared just now, right? If you actually look at all these warrant on the mother share charts, example this one, look at advanced charting, right? Then you'll be able to see what is the price entry and exit, like for example the support and resistance price. So this one will be applicable for you to trade the same time. For example, this is CMSB, right? You can just go to CMSB metrics. Then from here, you can actually identify what is the price to go in and exit lah. Yeah, so definitely you have to consider technical charting. If not, or if you only have, if you actually prefer how to trade it fundamentally, then you can definitely look for something that is with longer expiry date. and then you can hold it for maybe weeks. All right, but then do remember how to switch your warrants, because they will normally get decay very fast when it's approaching the expiry date. Yeah, but then technical charting would be more important.
All right. So the next question from Lee Chen is that could you share some insights into how the issuer, like such as yourself, evaluate the time decay effect on the price matrix?
Let me. Where is it? Where's the question? Sorry.
The question is in Q&A.
Oh, in Q&A. Okay, because it's already thick. All right. So how do we evaluate the impact of time decay, right? From how do you see from life price matrix? So time decay actually decays day by day, one. Sorry. Um, every day it will actually depreciate by X amount. Okay. So how do we actually look at it? You would just use. Okay, I think we are at this, for example, same SBC 66, right? If you click on the warrants details, you will actually, and you click onto more information over here, you'll be able to see the theta minus, it's actually depreciate every day by 0.0004 ringgit. So it's like 0.004 cents every day. So for time decay, you will be able to see the price matrix refresh every day, because one day during a day there won't be any time decay. But then if you hold on to this warrant, and then today that you will be able to see maybe 5 cents, but tomorrow maybe you will see it became 4.5 cents. Yeah, provided everything remains the same, then this is how actually it's stated on the price matrix. Yeah, so you can actually notice the differences.
All right. So the next question is by Yuk Long. So can RHB Investment Bank issue put warrants for Malaysian stocks? Any reason for not issuing many put warrants?
Oh, actually, yes, we can. We have just issued a put warrant on Ecovest HA, which is the first put warrant. Yeah, so if you're actually looking for other put warrants, then there's actually a few available in the market that's issued by Maybank Investment Bank. All right, so the major reason being, for first thing first, is that normally when we invest, we actually are more bullish in the market, right? So we will actually issue more on the call warrants. It's actually more highly sought after. And secondly, honestly speaking, right, for put warrants, actually it requires, um, I would say it requires a very good underlying, where there are people who actually buying the shares, and then at the same time they are looking for something to hedge. And then that's why we actually have a put warrants for them. Yeah. So I hope I answer your question.
All right. So thanks both our speakers for sharing insights into the budget 2026 and how you can leverage on warrants to write on this budget 2026 theme. So we have that's all the time we have for Q&A. So thank you so much everybody for tuning in for this session. Hope that you have gained valuable insights from the sessions today and learn how to use structural warrants to do tactical trading in the market. With that, I wish you the best, the pleasant rest of the evening, and perhaps see all of you here at Investment in Mid Valley this weekend. All right. So bye bye everybody.
Thank you. Thanks for joining.